Right, if I can do a quick sound check before I get started. I can see people are coming through. If you can pop in the chat box that you can hear me loud and clear, let me know where you're dialing in from. I know that we are across several different countries. I think the last time we counted it was 18 or 19. We may have actually improved on that now. So let us know where you're dialing in from. Say hi in the chat box, and let me know that you can hear me loud and clear. Fantastic. Morning, Laura. Morning, Magnus. So we've got Australia, we've got Sweden, and I can see lots of people coming through. Okay, fantastic. Okay, so let's get started. So it's Friday, it's July. How on earth did that happen? It feels like we were just ringing in the new year, and we're more than halfway through the year already. It has been a whirlwind of over the last 7 months for me. I have not stopped. I've been so busy doing so many different things, multiple projects going on, as many of you follow on my social medias or are interacting with me personally as well. So lots and lots of exciting projects of my own going on. Of course, my mentees have their projects that are going on as well. So across mentorships, TV, writing articles, networking, doing my own stuff, and helping with other people's. I have not stopped. I absolutely love it. I love doing what I do, but it's just gone by so quickly. I cannot believe I'm here talking to you, and it's July. Anyway, let's just take a breath for a moment and think about that. Time really does fly when you're having fun. I can see that everyone's coming through and you can all hear me loud and clear. So far, we have quite a few people from Sweden. So hello to my Swedish audience as well. Right, so for those of you that don't know who I am Hayley Andrews. I'm the co-founder of Your Freedom Empire, which is a business and property training organisation based in the UK. This webinar is At Home with Hayley. We originally started the webinar during the first lockdown with COVID to update our internationals and UK investors on what was going on within the UK property market. It was super successful. It's now in its I think it's 63 or 64 fourth episode, and it's ever growing and ever popular. I think we are now at, let me just have a look, 627 people, which is fantastic. So thank you so much for tuning in every week. Thank you for those of you that are not able to make it live, but then watch on our YouTube as well. I can see that our numbers are growing on that platform also. If you are new to the show, it's all things property, UK property, of course, where we will have different guests on the show within the industry, talking about their area of expertise, hopefully giving you some nuggets to take away. And we do a market update as well. So what we've got in store for you today. The special guest today is actually me. So surprise. So not as special as some of the other guests that we've had, but hopefully you still consider a special guest. So today what I'm going to talk to you about is a market update. I don't have a specific slot. I'm going to be answering your questions, some questions that have come through as well, and talking about what we're doing right now. And hopefully giving you an insight into what's going on in the UK property market at the moment, what I'm focusing on, and answering any of your questions or challenges that you may be having yourself. So as I go through the market update, if you can pop any questions that you have within the chat box, we will have an opportunity to talk through those questions. And I'll also be introducing you to a few different things that we've got going on at the moment, of which you have the opportunity to join or get involved. So I'm going to jump off camera as always. It's funny that a camera shy but on TV. No, it's just allows me to actually concentrate on what I'm doing. So this month then As I said, cannot believe I'm actually in July already. Let me just log into this here. I am operating two computers. For those of you that know me, know that that's normally a disaster. So I'm taking you through this month's update. What I'm going to do is I'm going to talk to you about some updates from this month, obviously what's going on within the property market, and also some bullet points from various different data sources and news feeds, and then we can have a discussion on it as well. So jumping straight in then, so land registry completed over 1.8 million applications in May 2023. That's a substantial increase from April, but obviously less than May 2022, which was the height of the market. The wonderful Jeremy Hunt, and I say that with a hint of sarcasm in my voice, he's announced he's won pledges from the banks for increased mortgage borrower flexibility, but buy-to-let properties are excluded from that, sparking, of course, criticism and discrimination. There's no real surprise there that there's, again, zero help for landlords. I'm not sure if any of you are aware, but I was actually at the Landlord Investor Show on Tuesday this week. Doing Property Elevator live, and it was a fantastic event, absolutely packed, standing room only for people that were watching the show. We had some very, very good pitches, and it was a superb event. Anyone was in that room. But as we actually left the event, there were protesters outside who were calling landlords parasites, among lots of other insulting comments that I got thrown at me as I was walking out of the door. And it's funny, isn't it? Because this is obviously what's going on right now. We are seeing that there is a huge attack. This government has been against landlords for a long time now, and that is obviously translating through into the public. And we have, the general public now actually attacking us and picketing outside events and things like that. So this is the turmoil we're in as landlords, and we are being painted as parasites, which is absolute nonsense and ill-informed information that people are actually making emotional decisions on. I actually wrote, The Guardian interviewed some of the people. One of our property elevator angels went outside and tried to speak to them and reason with them as well, to give them our point of view. However, he ended up needing a police escort to make sure that he was safe afterwards. So they were not to be, their minds were not going to be changed. And it is down to, obviously, all of this bad press that landlords are getting at this moment in time, and the sheer lack of support from the government for the service that we provide as landlords and investors. But The Guardian wrote an article, and if you haven't seen it, it's got great traction on LinkedIn. Go to Hayley Andrews on LinkedIn. I put a retaliation statement together, let's say, in retaliation to the Guardian's write-up about landlords and parasites and all things like that. So it's an interesting read. Go and have a look at it. Let me know your thoughts in the chat box as well. I know that I can see that some of you on here have actually commented on that LinkedIn post. Thank you for your support as well, and thank you for being in agreement with me. So go and check that out. But anyway, so back to my bullet points then. So UK house prices saw their greatest annual drop in since 2009. That was a 3.5%. That's nationwide. That's reporting those statistics. That a monthly increase of 0.1% in June was noticed. So we did actually see an increase in June. So while we may have seen a drop of 3.5%, and of course that is just nationwide, and you will have different statistics that will come out with different publications as well as it. And even as a professional, sometimes it's quite hard to actually say, well, which information do we rely on? But a monthly increase in June of 0.1% was noted. But of course, the full brunt of the higher borrowing costs is yet to really hit the market. So we will, in my opinion, start seeing a slowdown, a stagnant market, and some falls as well. So Zoopla House Price Index reveals a spike in property discounts, which again will have knock-on effect. And so 42% of sellers are accepting 5% below the asking price, hitting a potential. And that is a potential. No one has a crystal ball. 5% price fall by the end of the year. Although we are still seeing an annual increase currently of 1.2%. So it's not all bad news. We are seeing, in many cases, a flat market, and you do need to always look at your area. You will have micro markets, and of course these are national averages and statistics throughout the UK. So following the Bank of England's half-point rate hike to 5% in June, due to, of course, high inflation, 2-year fixed mortgages rates have soared now past 6%, straining, of course, prospective homeowners' affordability. As we said, we're yet to see this translate into the market. So the next couple of months will be interesting and will be something, of course, that we will be following. We are going to see, of course, a slowdown. We have seen a slowdown and I do think that we will see a stagnant market, which not much growth or very small drops. So Property Mark then, May 23 report underscored rising, of course, rental demand, increased rent prices, and landlords, of course, still exiting the market. And I'm seeing this as well across, internationals. Of course, we own a management, lettings agency and estate agents, and we're seeing lots of landlords that are looking to sell up and just get out of the market. Bad press, bad stigma associated to landlords, and the government, of course, not helping by just bringing in one blow after another for landlords over the last 5 to 7 years. So we are seeing lots of landlords now just deciding to sell up and place their investment elsewhere. There are, of course, other attractive places to invest that can produce very good returns and perhaps not less risky, but of course, less hassle, should I say? And I'm talking as someone that actually loves property. So that's not coming from me. That's just the general kind of feeling that a lot of landlords that perhaps are not, large portfolio landlords are actually looking at different places to place their investment and selling up, which is, of course, adding to the strain to the lack of supply of rental properties. And we are seeing many smaller landlords exit the marketplace, which is just putting even more pressure on affordability issues, because the demand, of course, is just growing, and the supply is, of course, dwindling as well. So I think that's enough of bullet points. I could pick up loads of bullet points. I've got several different publications open in front of me now, and we could spend all day talking about that. So with that being said, let's have a look at mastering the art of a flat market. So as I said, I do think we are in a flat market where we're not really seeing much. So what we need to say is, or what we need to ask ourselves is, are you ready to unearth the treasures in a flat market and shatter the barriers of inaction? So let's dive in and have a look at that. So this statement is really inviting you to explore opportunities in a stagnant or flat market, where prices aren't significantly rising or falling. You have to break through any obstacles or hesitations that are preventing you from taking action right now. Remember, a flat market isn't a no-go zone. It's an area or an arena, let's say, to showcase your skills. You will have to think outside the box. You'll have to be creative. You'll have to solve problems. You'll have to be persistent, patient, and hold your nerve. But it's where real pros get to flex their muscles. And boy, God, have I been bulking up over the years. We have to strategically maneuver through the challenge to seize all of those golden opportunities. I see lots of people say to me, well, when should you buy? Should I wait? Shall I wait for the market to fall? There's going to be opportunities over next year. Does that mean that I hold my cash and wait until I invest next year? And I always say to you that now is always the right time to buy. It's what you're buying. So sitting idle is never a way to go, in my opinion. In the world of investment, you're either in the game or you're watching from the sideline. Remember, exceptional results demand action, not excuses. And it's very easy for people to say, oh, you should sit and wait, or you should have purchased last year, or you should have purchased the year before, or now is not the right time to buy because. But it's very much always going to depend on what are you looking to achieve? How long are you planning on being in this market? What strategies are you adopting? What area are you in? It all comes down to that. It's not just about what the market is doing. And as I maintain and always have maintained, we can make money in any market. I am doing deals. I've done deals throughout the whole of COVID, pre-COVID, and will continue to do deals regardless of interest rates, regardless of what's going on within the market. It's about how we adopt and change and what we look at during those different market conditions. So now is always the right time to buy, in my opinion. When it comes to the race of asset classes, let's remember it is a marathon and not a sprint. Property will always take a lead. It might not this year, into next year, but give it time and you're likely seeing it outpace the competition once again and very soon. So you really need to ask yourself, what am I doing it for? So if you're getting into property to make a quick bucks, then it's the wrong game for you to play. And it's a very dangerous game for you to play. The real wealth in property is long-term property. Property is generational wealth that can serve you, your kids, their kids too. And it's never been easy, but it's always been worth it. And it will remain my main asset class of choice now and forever. It's a good, solid asset choice. It's there. You can touch it, you can feel it, you get capital appreciation year on year, you get good income. I focus on cash flow. The demand is there, the supply is lacked massively. So I think, for me, property will always remain my main asset class. Of course, I spread my risk across different types of property and different areas. So diversifying is, of course, always key. But that, along with gold, I think, will always remain my two. So I know many people that have washed their hands with property and had enough and fell out of love with property. I've fallen out of love with the government, let's say, and boy, God, have they made things difficult for us. But regardless and despite the constant attacks on us as parasites and landlords, I, Hayley Andrews, love and am in love with property as much today as I was 20 years ago. My relationship with property, of course, has had its ups and downs, but it has served me for many years and will serve me for many more years to come. So if we think about, so do you remember that the Zoopla bulletin we mentioned earlier? So let's have a look at that, or I'll let you into a little secret. So while it's true that a whopping 42% of properties are trading at 5%, and this was the main thing that I kind of took away from all of the publications that I've read to produce this update. So the 5% discount that we were talking about earlier, that Zoopla put in, is actually on asking price. Okay, which is the highest, of course, and as we said, since 2018. But let's not forget, this is 5% of the asking price, not the actual sale price. It's always important to keep things into perspective. And we said many times before, last month probably Paul said to you, I know I wasn't here last month, I was on mentorship, but the month before that, we're always talking about, well, what does Land Registry say? How much in comparison to asking price to actual sale price, what's the difference? And if you look historically at that, that's where the real data will lie. And that's where we take our information from. So while we are seeing 5% off the asking price, many estate agents were actually pushing that, really pushing the boundaries of asking prices and trying to get the top price for their clients, selling at the highest price. Of course, again, it's based off commission and percentages. So the higher they sell a property for, the better or more money they make. But if you actually look at asking prices in comparison to actual sold prices, I don't think we've seen much change. And as we said earlier with another bulletin, I forget the company that actually put that data out, we're still 1.2% up on an annual basis. So it's not all bad news. So I would say to you, be careful what you look at, be careful what you read, and be careful what you watch. There is a lot of scaremongering out there. We do need to look at what's going on within our areas, and we do need to make sure that we're buying right. And yes, we do need to be more cautious because there is uncertainty within the marketplace. However, the market is not crashing. It hasn't crashed. It's still standing. It's solid. It's stagnant. It's not moving much up or down, but we're still holding tight, and we're still obviously buying. So a report on the financial climate then. So 5-year swap rates slowly edging higher, brushing against the 5% mark, fairly high watermark historically. This means a bleak outlook for mortgage rates in the near future anyway. So higher interest rates in the near future are potentially here to stay. However, if you haven't locked in a rate yet, then perhaps sit tight and hold off for a little while and just let the market settle and see what's going on before you start fixing at the higher interest rates, because you're at the height anyway, there or thereabouts. So while I do think that interest rates may rise again, I don't think we're going to see much more of an increase on those interest rates. I think we're where we need to be to help inflation. And I do think that this recent, of course, June rise will have a knock-on effect and slow down inflation, which is ultimately what they're looking to do. So if you haven't locked in a rate, perhaps, of course, speak to your broker, your financial advisor, and have a look what's out there for you. But perhaps hold off before fixing in on a 2 or 5 year rate at this moment in time. Of course, I'm not a financial advisor. I'm not FCA regulated. You do need to speak to the professionals. It's just basically the conversations that we're having with our brokers, and of course many of our internationals and UKs that are looking and working with our brokers at this moment in time, the conversation that they are having. I think if we look at it, and it's always easy to look back, isn't it, and say, well, that was the right time to buy. However, in that particular time, you may not have thought it was the right time to buy with so much going on around you. But I think if we look at the perfect storm, the year 2019 was also a flat market with many choosing to sit tight. There was uncertainty within the market, home buyers dropping off, low volatility, rock bottom interest rates. It was simply the perfect storm for professionals. Quite often what we'll see is amateur investors get spooked by the calm and hop off the property train, and that's the cue to step in and take charge. The absence of competition is a blessing, not a curse. Remember that. When everyone else is selling, you buy, and when everyone else is buying, you sell. Always do the opposite to the masses. So what's the secret then to winning big? And are you ready to conquer the entry and exit points of when you should get in or exit the market? So first off, let's clear the fog. So attempting to predict and time the market correctly is as fruitless as pursuing a shooting star. Now is always, as I said, a good time to buy. You just have to identify what to buy, how much for, and make sure that it washes its face and protect your downside. Demand is what you're focusing on versus the supply. Make sure, of course, as I said, you're buying right, and remember that cash flow is king. Cash is and always will be king. So many landlords looking to sell, it of course is sad. I fully understand why, but sometimes the best course of action is to sit back and enjoy the view. Don't make harsh decisions. Just let the dust settle, let the market correct itself and reset, and assess all options to maximize your returns. Pivot is always the best word I can think of. Over the years, I've made some fantastic deals in all market conditions, each and every one having its flavour, but the underlying taste of success has always remained the same. I can't say this enough. Property is a long-term business for me, and those that are successful within property tend to have the same attitude towards their investments as well. Remember, you're not in the game for the short sprint, you're here for the marathon. And even in tricky markets, long-term investors can still reap rewards and high returns. And until we have a crystal ball, yet to find one, the best strategy is to hold on to your property and maximize your returns. The market is in a state of flux at the moment. It will, as it always does, adjust itself. It just needs time. And we all know that time heals everything. So what am I focusing on right now? Many of you ask. And so, I mean, I'm focusing on higher yielding assets at this moment in time. I'm focusing on income. I'm focusing on cash flow. I focus on commercial, also commercial conversions. HMOs work great in these markets, assuming that there's demand there and the supply isn't already meeting that demand. So always make sure you're checking that out. I'm not in the business focusing on large developments at this moment in time. That's not to say that large developments don't work. I would just tread with caution on large development sites. And that's just me and my personal opinion. But any of you that want to talk to me about your sites, your projects, your business, your strategy, how that may need to change right now or need any help, I run a helpline. So it's Hayley's helpline. It's actually not. Many of you have actually had calls. I can see the names that are on and coming through. But I run a call session where you can book a consultation call in. It's a 30-minute consultation call. It was really just to talk through originally issues that people were having with COVID and their investment properties throughout the UK for both internationals and UK investors that were coming through Your Freedom Empire. And of course, it was open to the general public as well. But it's been so popular, and the reason I'm calling it a helpline is because that's what it's actually evolved to be. So I do put a lot of time into this. I personally have the call with you, although if you would like to speak to one of the other mentors, you can. But it's a 30-minute call where there's no sale or anything like that. You basically just talk through any issues that you're having. I've got 4 booked in today. So if you'd like to book any calls in, please do let us know. You can do that through our website. And I will have a slide where you can scan the QR code shortly. But it is really just to talk about how are you adopting your strategy? Are you maximizing your assets that you currently have, making sure that you're producing the best possible outcome that you can? What are you doing to make sure that your business is stable and moving forward? What challenges are you having? Talking through those challenges. So please feel free to book a call in with me if you do want to jump on that helpline. It's quite catchy, isn't it? Hayley's helpline. So I got asked a few questions recently, and I'm going to share them with you. I can see that some questions, are they coming through? Yeah, we've got some questions coming through. But the questions that I got asked recently, I thought I'd share with you because they're relevant and could actually help you, the listeners, and hopefully answer some of your questions. So one of the questions was, what do you consider when selecting a location for your developments, and how do you ensure that the chosen location aligns with market demand and future growth potential? Which was a great question, and many of you know that I'm a research freak, so it's right up my street as well. So just to kind of answer that question, my location selection process involves thorough research. We have to ensure that we choose the right areas that align with market demand and offer significant growth potential. There's many factors that we take into consideration, such as, of course, demographics, market trends, infrastructure development, and amenities. I conduct extensive research to identify areas experiencing population growth, economic stability, and high demand for properties. But we as investors have to understand our target market's preferences, their needs, and also their purchasing power. We look at, of course, job opportunities, employment levels, crime, education, performance, broadband coverage, infrastructure development plans, and private investment coming into the area. We check out, of course, planning portals, the success rate of those planning applications. What are they? What number of sites are actually approved but not yet developed? So, we look at what's been approved, what's been declined, what's pending. Of those that have been approved, how many of the developments have actually been built and delivered upon? And if that's a small percentage and there's quite a large outstanding to actually go through that development phase and deliver those projects, how does that affect our the supply, and is the demand still there? So these are all things that we can do. This is public information. You can go and have a look at any local government planning portal and local council planning portal and have a look at this information. So, of course, we look at planned transportation networks, road, rail, airports and amenities, shopping centre, parks and healthcare facilities. We evaluate the potential for future growth by grants that are available or other incentives such as enterprise areas and areas of regeneration. So we select locations not only to meet current market demand, but also have the potential for future growth and success as well. Another question that people ask me is, what are some of the mistakes that that you see people make, and not understanding their market is and not doing the right amount of research on the area that they're looking to invest is one of the biggest mistakes that I see people make. It can be very costly to get it wrong, and we're professionals. We don't just choose a property and cross our fingers and hope that the strategy that we're applying will work. It's all very well thought of, planned out and specific. It's intentional where we buy, and there's a reason we're buying there, and we know exactly what that reason is and for who we're actually serving within that marketplace. So question number 2 that I've put here was what makes someone investable? Now, this is kicking off the back of the course. I am one of the angels for the hit Sky TV show Property Elevator. We did do Property Elevator live at the Landlord Investor Show, and we're also, of course, got season or series 6 coming out soon. So in the autumn we will have series 6 coming out of Property Elevator on Sky TV. And of course, it's a different market to any of the other series. It's absolute phenomenal show. I enjoyed doing it so much, both live and of course in the studio as well. But what do I look for then? So if you're looking to pitch a deal to me, so first of all, of course, I want to see a proposal, and I did do a video week 60, I believe it is, where it talks you through what that proposal needs to look like and gives you a framework to follow in order to actually put your proposal together to pitch a deal to us. But what I personally look for is, of course, I want to make sure that the deal or the person is able to produce significant returns on the cash that I'm investing. But that's not the only thing that I look at. So I look at the individual's experience and expertise, so their background, their track record. Have they done any deals before? It's not just about that, though. So it can be other qualities that they bring to the table. It could be absolutely anything at all. So it doesn't have to be that you are a seasoned investor, you've got a portfolio behind you or a track record of multiple different development sites. It can actually be that you have other qualities to bring to the table that are actually equally as valuable. So we do look at, of course, any experience that you have and expertise. We look at your background and your track record. I look at character and integrity. So do I trust you? Do I like you? I very much want to work with people that I like. I look for passionate people that are committed. I look for people that are hardworking, and I know that will go that extra mile to make sure that they deliver. I look at, are you up for the challenge? Do you believe in yourselves? And do you have a clear vision and a clear strategy that aligns with me and mine? I look at, of course, the ability to attract talent. So do you come across as a strong team player? Are you a good communicator? And lastly, I'd say, just to kind of finish this question off, the person that I invest in would have to have a good understanding of financial management as well. And then another question that I got asked, which is probably most relevant right now, but what's the biggest mistake most property investors or developers make? So as you all know, and anyone that's actively doing it, property is not easy, and those that sell it as an easy passive income and lie on the beach collecting revenue are either not doing it or have the best team in the world. I can't see how that happens. I work extremely hard out of choice. I love doing what I'm doing. We have systems in place, and of course we have methods that of course I've got people walking through at the moment interrupting me. So excuse me. I'll shout at them later. But you've got to have, while you can, of course, streamline your business, make sure that it's sufficient, make sure that you have systems and processes in place to, of course, minimize the amount of time that you have to put into it. No property business is passive. In my opinion, because truly passive does mean that you can just sit there and collect income, month in, month out without really doing anything. And those of you that are actively doing property know that that is not the case. And as I said, I work very hard to continue to build my portfolio. I work within my business and on my business, and I have people that work on my business as well. So I have employees that have also growing my business alongside me, but that doesn't mean that I'm not doing it myself as well. So one of the so if we're talking about investing in property, it can of course be an extremely profitable business. I wouldn't be in it if it wasn't. So we're all here to make money. We're all here to grow our businesses, our portfolio, and to majority of us leave a legacy for future generations to come. And of course, property can provide all of that for you, but it's also complex and has potential pitfalls. So some of the most common mistakes I see are, off the top of my head, underestimating costs. That happens quite a lot. Poor financial management, which of course can lead to cash flow issues, lack of market understanding. As I said earlier, understanding the market is crucial, and investment 101, failing to understand your local market, such as simple things like supply and demand, property values and rent rates, can lead to very poor investment decisions. Not having exits, multiple exits. So we always have at least 2 solid exits, a minimum. And as I've said again many times before, it's a minimum of 2. You can have as many as you want, but it's a minimum of 2. And if the deal doesn't have a minimum of 2 solid exit strategies that you're happy with, then you don't do the deal, in my opinion. Patience, of course. So again, property is a marathon, not a sprint. Most people want to make money, and they want to make money very quickly. And if that's the case, then you're in the wrong game. You need to be patient. It is, patience is definitely one of the things I see people lacking with property. They'll dabble in it. They haven't made any money the first 12 months, so they'll say it doesn't work. Well, that's not true. In actual fact, it is a long-term game, and you do need to have patience. You need to have a plan. You need to have a clear strategy, and you need to have a path to follow to get there. And you need to obviously put time, money, effort, and hard work into building this business as you would with any other. Not buying at the right price is also another mistake that I see people making. So purchasing the property too high, overpaying on the property, or just over relying on capital appreciation. I see that happen quite a lot. So while appreciation can be significant, it's not always guaranteed short to mid-term. Which is why you always need to make sure you make your money in the buy, you're adding value to force appreciation, and then you're either selling or refinancing, of course. And make sure that property washes its face, make sure that it covers from a financial point of view, and you're making the profit that you need in order to make the investment viable. And then lastly, I'd say that what can I put as last? I'd say, and I mentioned this a little earlier, failing to diversify. So putting all your eggs in one basket. You need to have a mixed portfolio of investments in different asset classes and different areas, and multiple streams of income. So putting all of your eggs in one basket can significantly increase your risk. So make sure that you are spreading your risk across different strategies, different areas, and different businesses as well. This is a great time for people to actually get compliant and source alongside building their own portfolio. There is so many people that are out there looking to buy, investors looking to get into the market as well as out, of course. But of course, there's a different stream of income. So you can source, you could, if you wanted to do a management company, you can do that. The compliance is the same. For both sourcing and management. There's so many different ways that you can make money out of property. It doesn't need to just be buying property and investing large amount of capital. You can actually look at various different routes of income, and whether you need to do that from a cash flow point of view or not, you are minimizing your risk and diversifying your business by offering different elements of business and different services that of course are generating income for you. So that might be something that you'd like to look at. So always think outside the box. Make sure that you're looking at obviously the time that you have available to put into your business. Make sure that your business is growing. Standing still is not an option because you are going backwards, and make sure that you're spreading your risk. So I've got loads of other questions here, but I'd like to go through a few more slides with you. So let's have a look at the questions we've got in the chat box. Bear with me. So we've got a few problems with audio. People can hear me okay? So sharing the presentation material I'm watching. So we've got Magnus. So Magnus has asked a good question about regulations around SA. So there was actually, I think it was a couple of months ago now, where there is potential for a new planning use classification coming in for serviced accommodation. I believe, don't quote me on this, but I believe it's going to be C5. But no, that hasn't moved any further forward at this moment in time. But as I've said many times before, I love serviced accommodation, and currently it doesn't have its own use classification, a specific use classification for serviced accommodation, because it's not a hotel, it's not a hostel, it's not a HMO, it's not residential either. So where exactly does it fall? So actually ironing that out and giving it its own specific use classification from a planning point of view would be perfect for the industry. And so no real update there. Of course, you've got the registration of all serviced accommodation providers that will be coming into place. But that's all stuff we've spoken about before. So no further updates on serviced accommodation, but still a strategy that I'm very much focusing on. Absolutely love the strategy. It works very well. Our serviced accommodation units are running at a very, very high occupancy. Of course, we do target different audiences as well, but the businesses that are doing phenomenal at this moment in time are our budget serviced accommodations, which are, beds for builders, people traveling for work and leisure, but at a budget rate. So they're much lower than some of the holiday stuff that we do have, although that's not serviced accommodation business that I focus on. So yeah, serviced accommodation is as it has been for quite a while now, a strategy that I absolutely love. I welcome all of the new regulations, and of course would love to have our own specific use classification for serviced accommodation units. I think legislation just irons out those people that are not particularly doing it as a business and not doing it correctly in the first place. So never be scared of regulations or legislation. It actually provides a very clear line that we have to follow as business owners, and leaves very little grey area. So it is very much black and white. Yes, so Claus just said that in Scotland we have to apply for licenses for SA. So yes, I mean, I don't actually have any serviced accommodations in Scotland, but I know that the licenses were supposed to come into place in October. I do think that it was overruled or has been postponed, clause, so you might want to check that out. I saw a recent publication from, actually, it was sent to me via one of my Scottish friends who does serviced accommodation quite heavily within Edinburgh. And so I'll WhatsApp that over to you, Claus, because I've got your contact information. But if I can find it while I'm on the call, I'll let you know what it was. But it is basically, yeah, so Edinburgh short-term lets plan ruled unlawful. So I don't have the full article here, but the policy is aimed at cutting the number of flats in the city that are used as short-term holiday lets. A plan to regulate Airbnb style lets in Edinburgh has been ruled unlawful by a judge less than 4 months before it was due to come into force. So you might just want to check that out. That was on the 8th of June, I think it was, or the first week of June. But it's on BBC News and several other outlets as well. So we've actually got loads of questions. I'm not going to have time this morning to go through all of them within the chat box. However, I am going to... Oh, I'm not on camera. Hi, I am here. Property Success Convention. So if you would like to come along to our Property Success Convention, then you can scan the QR code on screen now, or you can pop along to our website and you can secure your spot. It is free, so you can register your seat. It is virtual. So it is all done over Zoom. So you will be able to learn all things property. So it's very, very jam-packed one day, where we'll be talking to you about, of course, all of the different strategies, what work right now within the industry, what we're doing to protect ourselves, how we're stress testing with, of course, interest rates being higher or the highest we've seen in a really long time. How do you do the research? Who do you need within your team? What questions do you need to ask? So all of that type of stuff. So everything is jam-packed. It is lots and lots of content, lots of stuff for us to cover. It's a great day. We get absolute overwhelming feedback from the people that do attend. So if you would like to know more and you'd like to see what we're all about, then pop along and join the next Property Success Convention. It is live in person, but it's over live in person. Is it live in person if it's over Zoom? It's live. And I'm there in person, but you're not. But jump on. It is, of course, for those of you that are in the UK, but also international as well. So many of you have actually sent me congratulations and given me excellent feedback on the Blue Bricks magazine publication that I did on how to go from being a property professional to a property profitable business. So Blue Bricks have kindly given us a QR code and a link for any of our cohort to sign up for a free trial. So the magazine is Blue Bricks magazine. It's all things property. You can see John Howard is on there as well. He was actually in the same magazine as me, talking about the 4 golden rules of buying at auction. And of course, John is 40 years in the industry. He's been around a really long time. There's not much that he hasn't experienced within those 40 years. He's a very, very knowledgeable guy, and of course was with Auction House, I believe, for a very long time, over a decade. So he knows his stuff when it comes to auctions as well. And of course, auctions is something that we focus on looking at, of course, what's going on within the marketplace, because normally what we will see is what the auctions are doing. We will see trends change within the auctions around 6 months before we see it in the actual marketplace. So if you're not registered to local auctions, get registered and just monitor and have a look at the listings, how those listings are performing, and their sold stock as well. Because it will give you a very, very good insight, not only of local yields, what properties are selling for within the auction arena, but also, what's actually going to the market, and what prices they are selling for will really give you an indication of what the actual market or open market is going to be doing maybe 6 to 8 months later. And so it normally gives you a good, not always, but does give you a good indication of what's going on within the marketplace. So this is the magazine. I've got it here. You get a free copy and a hard copy as well. So you can scan the QR code. It's really just everything you need to know about how to be a professional. So there's lots of different insightful information in there, and of course there's lots of other people within the book as well. It's not just me and John. There's some really, you've got Tina Walsh, who is fantastic for any of you that are sourcing. She's got an amazing platform. There's loads and loads of people in here. I'm flicking through the book now but it is a very, very informative magazine, but make sure you get that free trial and your hard copy. And for those of you that have asked for it to be signed, of course, if you come and see me, I'll sign it for you. I'm not traveling to Hong Kong to sign your magazine, unless you cover all expenses, and then I might just pop on the plane. Right. So, of course, we've got property question time. I haven't actually been on the show for a while. I feel really bad because Michael is asking me to come in to the studio on a regular basis, and I just haven't had time to be able to get into the studio to film anything over the last few months, actually, probably more than that. But all of the episodes, regardless of whether I'm on there or not, Property Question Time is a great platform. It's industry experts across the field in different areas of the UK, across different parts of the business, and it's very, very informative. Any of the episodes that I have been in are on Your Freedom Empire's YouTube channel, where this will actually go up as well. But they are on a Tuesday and a Thursday on Sky TV, channel 186, and it's on, I believe, 8 until 9 across Property Question Time. So jump on, have a look, watch on our YouTube channel, but also listen to other industry experts, their feel for the market, questions that the public are putting forward for us to answer. So it's super, super informative. I've met some fantastic people that I now work with through that show, and I will get back into the studio, I promise, at some point in the near future. I just have had so much on with all of the other stuff that I've been doing. I haven't had that opportunity. But I promise to get back into the studio, and you will be seeing more of me on there soon. And then, of course, this is the consultation call that I spoke about. So it can be with me or one of the YFE mentors. So you can scan the QR code or pop along to our website, and you can ask any questions that you may have. If you have questions that you'd like us to cover, you can send them through to admin@yourfreedomempire.co.uk, and we'll make sure that we read them out on the next show, which is the first Friday of every month. And that's it. So I have a jam-packed full day. So I do have multiple different calls that are booked in. So I've got 4 of those calls booked in today. I've then got mentorship calls booked in. I then need to pop along to one of my sites where we're just starting fit out and make sure that everything's okay. And so many things for us to do today. I'm actually tired just thinking about how full my day is. So I am going to love you and leave you. I'm going to say thank you so much for your support as always. It's been a wonderful 7 months into the year, and you know, I'm loving everything that I'm doing at the moment, despite being absolutely shattered. You only live once, but make sure that you stay positive, make sure that you're doing your research, make sure you're asking questions. Feel free to book in on Hayley's helpline, and I'd be more than happy to have a conversation with you. But hopefully you enjoyed the update this week or this month. I'm going to love you and leave you for now. Wish you an awesome Friday, an excellent month, and I will see you all again next month. So goodbye for now.